In this video, I want to talk about why buying added years of service was so beneficial for doctors and dentists when thinking about topping up the benefits from the NHS pension scheme. The added years scheme has been replaced now by a new version, but the old scheme was very valuable. Sadly though, many doctors were steered away from it towards alternative AVC arrangements. So by the end of this video, you'll know why added years were so superior to any other form of additional voluntary contribution arrangement, and what to do if you were sold something else. So let's start at the beginning with what do we mean by buying added years of service. So-called added years is a concept within the NHS pension scheme that allows members to purchase additional years of service. This can be a valuable option for doctors and dentists as it can enhance their retirement and other benefits in several ways. Firstly, added years enhanced pension income. Added years increase the number of years of pensionable service used to calculate retirement benefits. Most doctors and dentists do not build up enough years in the NHS pension scheme to achieve maximum benefits just through natural service. Time spent studying before starting work generally means it won't be possible to have a 40-year career, which is the number of years needed for maximum benefits. So if a doctor joined the scheme in their mid-20s, say, the scheme allowed the missing 5 years to be bought, thus giving maximum benefits at retirement. Whilst this was a big benefit on its own, added years had other valuable benefits on top. Early retirement being one. The opportunity to retire early is one that most people value highly. It's possible to use added years for this purpose, building up an unreduced pension through the purchase of extra years of service. Added years also gave flexibility in retirement planning. Added years was a more flexible arrangement than is often believed. Members of the NHS scheme could choose to buy added years at different career stages. For example, a young doctor just starting out may only have been able to afford 1 or 2 extra years, but a fully qualified consultant should have had scope to purchase more as their career and salary progressed. This flexibility allowed adjustment to the size of the pension benefits to suit individual needs. Added years were a very tax-efficient arrangement. Contributions made to purchase added years are usually tax deductible. This can provide tax benefits for higher rate taxpayers, making the added years option even more attractive, as it permits high rates of tax relief to be granted at source, particularly for employed consultants. And finally, added years gave additional protection to dependent family members. The NHS pension scheme provides benefits for widows, widowers and children. By increasing pensionable service through buying extra years of service, doctors and dentists can increase the financial security of family members in the event of death. So that's a quick summary of why added years was such a good option for enhancing scheme benefits. However, I've represented very many doctors, GPs and consultants, and dentists over the past 20 years who were advised not to buy added years, but to contribute more towards their retirement with an FSAVC pension plan instead. FSAVCs, which is an abbreviation of Freestanding Additional Voluntary Contribution, is an investment-based product which builds a retirement fund based on the contributions being invested in assets such as company shares and bonds. There are no guarantees. Unlike with added years, poor investment decisions and poor performance will lead to a reduced fund. This is in contrast to the benefits that are paid from the NHS pension scheme, including added years, which are derived from length of service and salary. There's no investment risk involved. This is particularly to the benefit of GPs and dentists. They are somewhat unique in being both self-employed and eligible for membership of the NHS pension scheme. So unlike other self-employed individuals, they benefit from the secure benefit arrangements that the NHS scheme provides. This means the choice of arrangement for voluntary contributions is wider than normal. GPs and dentists are not restricted to using investment-based pension plans like other self-employed individuals. Uniquely, they can buy in more secure benefits through the NHS pension scheme, just like their hospital consultant counterparts. So you may wonder why IFAs and insurance company salesmen would recommend FSAVCs instead of suggesting added years. In short, it was self-interest that drove over 1 million FSAVC sales, mainly to public sector professionals. The profits and commissions from steering people away from employer schemes were so large, it was almost inevitable the financial services industry would recommend FSAVCs in the great majority of sales. If this happened to you, how can you recognise if you were not given all the information you should have been? Well, I see the same breaches of the regulatory selling rules crop up time and time again in sales literature. And so here's just a few of the common signs of mis-selling. Not being fairly advised of the pros and cons of all available options, including added years. Being told an FSAVC was in fact the only option. Not having the investment risk fully explained, and not being told about all the charges that would be levied on an FSAVC. So what can you do if you suspect you were mis-sold an FSAVC? Well, it's never too late to get your retirement back on track, even if you are in retirement now. It's possible to prove mis-selling and be compensated accordingly. That compensation should be of an amount to put you back in the position you would have been in if you had taken the better option of paying extra into the NHS pension scheme. Now, don't worry if this happened some years ago and you have stopped paying into the FSAVC. 9 times out of 10, I do still find the original sales paperwork in the seller's archives. As long as you can remember the name of the company that administered your FSAVC, I can do the rest. So finally, how do you find out if you might be owed compensation? How do you go about claiming it? Well, if you suspect you were a victim of FSAVC mis-selling, you're not alone. And you must not feel there is nothing that can be done, because it was so long ago. Many people have challenged the advice they were given and been duly compensated. It's crucial to seek advice and guidance to address the impact of mis-selling on your retirement savings. I set up Greg Vaughan Financial Services and Pension Claims with the sole aim of helping people to do just that. Please feel free to get in touch for a free, no obligation assessment of your FSAVC sale. I hope you found this video helpful and informative. If you think you were a victim of mis-selling or just have some further questions, you can find out how to contact me at www.pension-claims.com. Many thanks for watching.